My name's Ryan Day. Super excited to be here. So I focus on business development. We have an action-packed agenda for everyone in order to essentially help you drive more volume to your business by leveraging our unique products in the marketplace in order to have a competitive advantage versus other brokers in the marketplace. So I've been with Calvert for about 3 years now, and main focus of my role is building relationships with awesome brokers like yourself on this call. And then we also have Rob Maver on the call as well too. He's a senior underwriter, been with the company for about 5 years now, and he'd be the main point of contact for anyone who has any live deals that you'd like to discuss. So a quick agenda, we'll review our products, also have a really handy flip analyzer tool for those of you who are not familiar with this tool. It's a phenomenal resource in order to market to your clients in order to assess profitability for the deals that they're currently looking at. We'll be getting into the lead generation tips that we see brokers being successful in executing, and then more than happy to have a Q&A as well too. If you have any pressing questions, we just did one of these for Ontario. If you'd like, unmute yourself, put the question in the chat. We're more than happy to answer your questions as they come along. If you're just able to go to the next slide there, Rob. So a little bit about Calvert. We've been in business for over 40 years. So we have lots of experience managing risk. We're based in Calgary, so I know Calgary and Alberta as a whole has had quite a turbulent past. So lots of experience managing risk in a turbulent market in order to ensure that your clients will be successful in the mortgages that we provide. We became a MIC in 1982, and what we really focus on is short-term lending. We define short-term as 12 months and under. The shorter, the better, even. If you need capital for a few days, a few weeks, we're more than happy to help arrange that up. We'll be getting into our value proposition of what makes us unique versus all the other, individual lenders mix out in the space. Last year, we lent out just over 350 million in just over 850 loans. And our mission is to be a trusted advisor, offering an effortless experience to customers, investors, partners, and helping them succeed and grow in thriving communities. And the main products that we'll be focusing on are our flip financing that we're most known for. This makes up around 65-ish% of our business. Our interim purchase product, equity takeouts, and purchases for first and second mortgages. Then we'll also be getting into the nuances of what we recommend for lead generation tips for each of these products in order to source deals, in order to help grow your business. The first product that we'll be getting into is our flip financing with as little as $10,000 down. If you're just able to go to the next slide there, Rob. And what makes us unique, I guess, prior to getting into the flip financing, is we are able to fund deals extremely quickly in Alberta. So we're able to fund deals in 1 to 2 business days. If you do require funding within this time frame, we may charge a rush fee of up to $1,000. And how we're able to offer such quick turnaround time is because, number one, we do not require a third-party appraisal. As long as the value of the property is under 1.5 million and it's 4 units and below, which makes up 99% of our business. So we have 4 in-house analysts who value properties as is or as if complete if the client is doing renovations. And again, these are completely for free. We're able to complete them within 24 business hours. They're remote as well too. So the client saves a few $100s with not having to obtain an appraisal, but also the speed and the convenience of being able to do an in-house valuation, where we're able to do it just through our desktop and don't need physical access to the property. These valuations are done within 1 business day, and we are also able to collateralize other properties if clients do have equity. So if they do have multiple properties that are looking to collateralize it into 1 mortgage, we're still able to use the analyst that we currently have in-house in order to value multiple properties at once too. Another huge value proposition is our legal documentation. So we prepare all of our mortgage instructions currently in-house through our administrators, and this significantly reduces the turnaround time in order to provide your clients a response and in order to close files. Because of this and how we're set up within the law society, we only require one lawyer to close the transaction. So I know it's common to have two lawyers close the transaction, one to represent the client and one to represent the lender. For us, we're able to instruct the client's lawyer, similar to the big banks, and they only pay one set of legal fees as opposed to two, which is quite common. We do have loan down payment options, especially if a client's flipping, where the minimum we need down is $10,000. We'd like to think we have a really fast and simple approval process. And as long as you provide a broker complete package, we are able to issue a commitment letter within 1 business day and also fund within 1 to 2 business days. So outside of all of this, we find that we have a really unique value proposition in that we provide phenomenal customer service. If there are any clients on the call, hopefully you can attest to that. We really try and pride ourselves on being responsive and being available, as typically time is of the essence, especially in this super hot market that we're experiencing in Calgary. So each additional hour, typically it helps the client with providing an update on where their mortgage stands. So the first product we'll be getting into is our flip financing. Our rates are really predicated on down payment. So the cheapest capital that we have right now is 9.99% with 25% down, 11.24 for 20% down, and then a sliding scale going up with the lower amount of capital that the client puts down. I know that with $10,000 down, the 18.24 can cause a little bit of indigestion with that high of a rates. For us, there's always a time and a place. Obviously, the minimum $10,000 down isn't applicable in some scenarios. Where it can make sense is if a client is going to be in and out in an extremely short period of time. So if a client's looking to purchase a hoarder house where they're cleaning up the property, doing junk removal, putting in new paint, flooring, trim, and they're in and out in a very short period of time, these scenarios can make a lot of sense for the client to put a minimum down as opposed to tying up greater capital at 20-25% down, as they have less capital into the deal. So the return on investment would be higher as opposed to putting a larger down payment. Option number 2 of when it could make sense to put the minimum down is if a client is doing one project and they're putting 20-25% down, they can stretch their capital further and get the benefit of leverage that typically real estate investors really appreciate. And as opposed to doing one deal, they could do 2, sometimes even 3 deals, depending on their purchase price and the exit strategy, and scale their real estate portfolio even quicker by capitalizing on more opportunities. And then point number 3 is that these are meant to be extremely short term. So this 18.24 is an annualized rate, a more accurate way to calculate what the effective interest rate is that the client will actually pay. It's just dividing this by 365 to get your daily interest rate and then multiply by the number of days that the client expects to be in the loan for. We'll be getting into a really handy tool in order to assess how much a client is paying interest for their flip, in order to provide a clear understanding of all the costs associated with the flip. And so it's very digestible in order to understand of the capital invested in the project, where that capital is going. The minimum 10K down maxes out at a purchase price of $800,000. Anything over a purchase price of $800,000 will require a little bit more down. These terms are 6 months. They're not amortized, interest-only payments. Our fee is 1.5%. You charge your broker fee. Typically, it's around 1.5%. And all of this is capitalized into the mortgage for the clients, and they are not paid on closing. Obviously, investors do appreciate this as they have less capital, upfront capital that's required for the deal. And you're typically paid the next week or 2 after closing by EFT, as long as you're set up by EFT. So this is a really handy tool that brokers, real estate investors, people within our network really enjoy and appreciate. You'll also be sent out this tool, our product sheets, and a recording of this presentation. So don't worry if you're stressed about not taking notes. All of this will be sent out. So this tool is what internally we use in order to underwrite. It's not required for you, the broker, to complete this tool. But whenever we receive a deal, this is what we're going to be populating on our back end to provide context on what we're looking at. You're also more than welcome to use this tool as marketing material for your own. You can take out Calvert's branding, populate your contact details, a photo of yourself, your brand colors in order to brand this tool as your own. You have our full authority in order to do that. But in essence, it analyzes, sorry, if you're just able to go back one slide there, Rob. Um, in this tool, it analyzes all the costs associated with purchasing the property. So at the top left-hand side, we have the purchase cost, which is $1,500 roughly for legal cost, property tax adjustment, inspection if they choose to get one. And then at the bottom where it says total purchase cost, this is where it populates obviously all the costs that are calculated as it relates to all the costs associated with purchasing. Section C is all the costs associated with selling, which is primarily the realtor fee. In this tool, if you are not familiar with what one of the cells means, all of the cells that have the red triangle at the top right-hand corner provides a definition of how it's calculated and what the term is. And then in section D, all the costs associated with operating, which is your property tax, insurance, and utilities. All of the cells in the peachish color, you're able to update as you see fit based off of the property that they're looking at. Obviously, if it's a condo, they'll have condo fees, but you're able to update the numbers to get a real-time understanding of what the deal actually looks like, taking into consideration of all of the expenses for the specific property the client's looking at. The only real numbers that you will be required to update if you choose to use this tool is the months to renovate at the bottom left-hand corner, the months to sell, which we have as 2 months. So this totals 4 months here. The renovation budget, which we have at $50,000. I appreciate the mouse work on this, Rob. It looks great. The purchase price of $450,000, down payment of $90,000, which is 20%, and the after repair value of $610,000. From this tool, you'll be able to clearly articulate to the client what the monthly interest payment is, so their mortgage payment, which is $3,693. We like to be as clear as possible. So in this example, a client's paying $116 in interest on a daily basis. So each additional day that the client is able to sell the property sooner, they're shaving off $116 in interest. We have in here a 2.5% fee, so $9,000. That's 1.5% on our end. And say if you charged 1%, then that would total the 2.5% total. So that's $9,000. The total interest costs are the monthly mortgage payment, which is $3,600 times 4 because they expect to be in it for 4 months. And that's how you get to the $14,300 number. So the total financing cost for this deal is just over $23,000. And I know we can get pushback for this. One thing we like to illustrate is specifically for this deal, for the private lender and the broker, if you take a look at the selling costs right in the middle of the screen where it says real estate agent fee, they're paying the exact same in realtor fees up at the top there, Rob, where it says real estate agent fee rate under selling costs. So they're paying pretty much the exact same to the realtor, to the selling and listing realtor in fees as they are to the private lender and to the broker. Not to bash realtors, but it's pretty much exactly on par with how we're compensated and you're compensated as well as the realtor. So I know there can be pushback on, oh my God, I'm paying an exorbitant interest rate and fees, but just something we like to point out. So that they're paying more or can be paying more to their realtors. So once you have that populated, it will populate the profit. So in this deal, net of all expenses, excluding taxes, just because taxes can be quite obviously personal, depending if they're doing it in their personal name or a corporation. So the client expects to make $57,000. We would need to verify $160,000. So based off of the numbers that the client populates, this will total what we need to verify in terms of liquid capital ready to go in order to approve the loan. We are able to get creative with where this capital comes from. We're able to use obviously capital in their checking account, savings account, lines of credit, if they have capacity on credit cards even, joint venture agreements. If they have other properties with equity, we can blanket that up to 75% loan to value. And it can come from multiple different sources of these different examples that I'm mentioning. So in this example, the return on investment is 36% for the 4-month period. If we put that on an annual basis, it's just over 107% on an annual basis. In this deal, because it's a fully open mortgage, we write to really illustrate the time is always of the essence. So each additional month that this project takes, their monthly variable cost is, call it $4,100. Down here in the spreadsheet, we like to illustrate what this deal looks like if it takes one additional month. So 5 months as opposed to the 4 months. So they're eating into, call it $4,000 in profit that they're taking out of their pocket. Or if it takes one less month, then they're making an extra $4,000 in profit. So again, setting this tool out, feel free, play around with it. We have a video tutorial on YouTube going into depth in this tool. If you have any questions, comments, feel free, call, text, email myself. More than happy to give you a crash course on how you can use this tool for your clients in order for you to be the expert in these unique solutions.
Awesome. Thanks, Ryan. I'm going to take it over from here. Again, any questions that come up, guys, feel free to throw them up on the chat. At the conclusion of the presentation as well, we are going to be opening it up to some discussion as well. So if anything comes up, throw it in the chat. One of us will get to it, or we can address it at the end. So thanks, Ryan. Awesome job covering the flip analyzer. We want to make sure that our clients are going into the deals with their eyes wide open, so they have a full understanding of where their money is going, what their projected profits could be, and what are some of the contingencies that could happen within that. One of the things that we need in order to underwrite a flip is a true understanding as to what they're going to be doing to the property. If clients are kind of vague with details, we're going to make the more conservative assumption. So we kind of realize that some people who are great at swinging hammers and bolting on doors and doing renovations, these people might not be great at paperwork, and that's fine. So what we did was we developed this reno budget and checklist document to try and make it as easy as possible for them to translate what's in their head into ours, so we can give them the most accurate ARV possible. The more confidence we have in our after repaired value and the information that's gone into that, the higher probability of us in granting aggressive financing in terms of higher leverage or better rates. So this is a fillable Word document. Shouldn't take longer than 10 to 20 minutes to complete. They can just click what if they're doing that line item, what the cost is, and then just putting in some supplementary notes. So paint, yes, doing paint throughout the whole house. These are the colors that I'm thinking. Done. Ceilings, smoothing them out, popcorn, whatever. Yes, no, this is my cost. Casing, doors, trims, etc. It's not a big essay or anything like that at all. We can also look at contractor quotes and whatever documents they might have, but we find, generally speaking, the way that this checklist is built is it forces them to think about every single room, and then it in turn helps us extract more details to produce a higher ARV. What we often get is people will submit something, they're missing a few things, the ARV comes in lower, and it's like, oh, I'm putting another 30 grand here. Well, we needed to know that. So this kind of gets ahead of that, and this is something that's going to be included in the correspondence that we send out afterwards. What I'm going to talk about now is one of my favorite products. It's called our interim purchase. And what this property does, or what this product does rather, is it allows us to lend on the current market value of the property, not necessarily the purchase price. The most common uses for this product is people bought a property a while ago and they bought here, the market did this, but there's all this equity that they can, in theory, work with since. Pre-construction new builds. Maybe they changed their mind and they wanted to sell for a profit. Maybe they changed their mind because life circumstances changes. Divorce, illness, they can no longer qualify for that mortgage that they thought. So maybe they just want to save their deposit and get out of the deal and sell and put some cash back in their jeans afterwards. That's a totally acceptable use for this. We've also seen some other creative brokers use this. They close on this with our capital with less down because we'll lend up to 80% of the market value or whatever the client can refinance for in this instance. And then they'll do an appraisal and refinance on the appraised value out with a conventional lender later. So the net effect is that the client closes, puts less down, keeps more of their down payment to go and do other things. So again, the key takeaways here, we're lending on the market value of the home, not the purchase price. We do that valuation for you, as Ryan mentioned earlier. And then lastly, about this product, I'll mention too, a lot of the time, this is just a client working with a different mortgage broker. Maybe they didn't have their documents aligned. Maybe they need to file their taxes. Maybe they went to the bank and the bank told them was fine, but they didn't have a commitment letter. So this can also be used as a Band-Aid to help a client close a situation when they don't have time to align that conventional financing as well. We're going to send out all the rates and terms after this. But generally speaking, all of our mortgages come in 6-month interest-only loans. They're fully open. And the rates for this product start at 10.74. Again, the maximum loan to value on this product is 80% of the market value, with the client having at least 10 grand of their own cash into the deal. Ryan, do you want to touch on this slide a little bit quickly?
Yeah, you bet. So we chatted with some of our top brokers, and tried to understand, okay, when you were first starting out for our products, what made you successful? Where were you finding lead generations? Where were you finding leads? And these were the top referral sources of what they did in order to be successful for finding leads for our products. So number one, obviously pretty clear, investor-focused real estate brokerages. And specifically for our in-term purchase product, as you can use it for pre-construction focused real estate brokerages. We're seeing a lot of people in Alberta and in Ontario who, they bought 2-3 years ago when rates are at historical lows. They're closing on it in a week or two, and now they don't qualify. So our in-term purchase product is a great solution. So if you're able to build partnerships with these investor-focused pre-con realtors, we've had a lot of brokers be really successful in that. And again, reminding them, don't need an appraisal, can close in a few days, and it's fully open. So the client can list on the MLS immediately, right when they close on the property. Real estate investor Facebook groups. These have been phenomenal for mortgage brokers, especially obviously the investor-focused communities within your specific city. Typically, lots of these people post that they have properties that they have under contract, and obviously they're seeking financing. Tradespeople are huge, just because if you educate them that you have a lender that doesn't underwrite traditionally based off of GDS, TDS income, and as long as they have the capital, they can do volume as it relates to flips. This typically opens up a lot of doors for them with changing the paradigm of what they thought they needed to qualify for a traditional mortgage, as we're essentially lending to the client with the understanding that they have a profitable deal that they're looking at. Wholesalers are huge as well too. More than happy to send out a list of wholesalers. These are individuals who buy properties off market and then assign them prior to closing, and they're typically great. They're great properties for clients to flip or buy, renovate, and refinance. Real estate investor groups, there's quite a few that are in Calgary, Edmonton, Red Deer as well too. Obviously, these are fantastic for finding and exploring new opportunities. And then podcasts. Podcasts were huge for us when we first started out, when we started lending in Ontario. So if you reach out to the clients who are interviewed on these podcasts, typically they have sizable portfolios, and they're always looking for creative solutions in order to help grow and scale their portfolio, especially as it relates to flips. So these were some of the high-level scenarios of where we see brokers be successful for our products as it relates to lead generation.
Thanks, Ryan. Yeah, some great tips in there. I really like, using the power of Facebook groups or reaching out to local contractors and saying, hey, did you know you can buy a house with only 10 grand? I think there's some great tips in there. Why is that clicking all over the place? I'm so sorry about that. Other types of businesses are business that we love, bridge loans, mismatch purchase and sale date. A lot of the time people will come back and say, hey guys, we could line up these purchase and sale dates, but other times it's very intentional in that they want to take possession of the new house, have a graduated moving process. Sometimes this can happen with seniors too. You know, this is most common in that age demographic, just because the move is stressful enough. So they're looking to do it a little bit more comfortably. We look at these loans, we secure on both of the properties. If the sale of the one property won't pay us out in full, we'll want to understand how the balance of that loan could be repaid. Again, though, going back to what we're really selling the client in this situation, it's not a mortgage. We're really just providing them a solution to move comfortably into that downsize or that last home for them too. So one of the things that we'll look at too, it's like, hey, maybe you're equity rich, but a little bit light on liquid capital. Do you need a little bit extra money to cover your moving expenses, to get some furniture to get moving, maybe to order some extra takeout for those first few nights while you get your kitchen set up? We'll really look at everything that we can do to try and make it a little bit more comfortable, especially too with that type of client. There can be a little bit of sticker shock or rate sensitivity, if you will. So we'll focus on what the benefits and what the comfort that we can provide rather than just focusing on the rate and the fees. Again, 1.5% broker, or sorry, 1.5% lender fee. Brokers set theirs. Our minimum fee is $2,000. If the 1.5 is less than $2,000, that is our minimum processing fee. And we can turn these around pretty quickly. Max loan to value is 80. If the property is firm sold, we can go to 85. Sometimes what I've done is if the client really needs that extra 5% of liquidity, but it's not firm sold yet, what we can do is we can write the loan for the extra 5% and then advance that once that sale becomes firm or once they get it under contract. So there's certain things that we can do to really provide a good solution for the client and maximize the amount of that solution depending on what we're working with. Some details as to where we lend in Alberta: Calgary, Edmonton, Red Deer, Lethbridge, sometimes GP, depending on the sales data. Our minimum and our maximum loan sizes. No minimum loan size. That said, we got to make sure we're not offending the 32% APR cost of credit because we are not registered at as a high cost of credit lender. Our focus as a lender is entry to mid-level real estate. Reason being, people are entering that price point. They're downsizing to that price point. We have the most buyers, the most demand. As a result, we have the most sale points to confirm the valuations that we're lending on. Also, depending on the type of client that you're working with, if it's a real estate investor, this is the market segment that they should be focusing on because they're going to have as much data confirming their business plan as possible, i.e. sales data. We want to be working on projects where we have market data to confirm it, that we're not speculating. And we rely on the data, and we'll show you our data in our underwriting process. So you can in turn put that forward in front of your client and say, hey, this is what we're seeing and why, and this is why we like it, or this is why we don't. We will lend to corporations, provided that we get a PG. I think that's pretty standard. Also, first and second mortgages, we can look up to 80% loan to value. If we're looking at an equity deal or a debt consolidation, we'll scale back the loan to value to 70, 75, depending on the profile of the loan, property, ability to refinance, etc. 80% is generally reserved for properties that have a strong and immediate exit strategy by way of sale or refinance, and we view it to be achievable within 6 months' time. And again, I touched on rates, or sorry, 85% loan to value. Submitting a deal, we're under FinMo, Filogix under private lender, and Velocity under alternative lender. We can receive the application and the credit reports through those platforms. Additional documents need to be emailed to the underwriter that you're working with because we can only get app and credit on those platforms. One of the biggest things I'll stress, guys, is we really want to make sure that we're providing you with a great service. We know how valuable your time is. We know how quickly deals move. We know that if you're working with a client, they could be shopping brokers. Our whole MO is to provide great service to the broker channel so you guys can be positioned offer our solutions to the client. If we get all of the documents or most of the documents, we can get you an answer within a business day. Ryan touched on some of the things. We don't need appraisals, saving $500, but more importantly, time. We have a big team of underwriters. We hired a few in the fall. We just hired a couple more now. We want to make sure that we have the bandwidth and that we have the system set up to give you the answers that you need at the speed of business. We can even fund files within a day or two in Alberta. We do reserve the right to tack on a rush fee in those instances, depending on what our resourcing is like at that time. Again, though, if we get that information from you, we can get you that answer that you need within a business day. And hopefully that helps you keep that client and close the deal. We're going to send out the list of documents that we need to. The one thing I'll mention too about documentation too, is we're not going to ask for 5 documents when 3 will do. We're looking to move to a decision, the path of least resistance, in a way that we're properly assessing risk and the client situation to make sure that we're providing them with what they need. But again, our whole offering and a big thing in our culture in our underwriting department is making sure that we're providing the best service that we possibly can at all times. This is our underwriting team. Contact information below, depending on who you work with. We encourage you to keep working with that person. We're also really active on social media too. And we like to celebrate the success of our clients. You do a great deal with us. You have a marketing idea for how you think our products could be leveraged to help you capture more business. Let us know. We can do up a case study. We can white label our product sheets. Ryan mentioned rebranding the Flip Analyzer. If you wanted to do a webinar with your clients or a brokerage that you're trying to establish that relationship with, just let us know. We're all here for the ideas and doing what we can to help you do more. At this time, we'll open it up to some questions.
Patricia McKean here with Mortgage Architects.
Mm-hmm.
I have 2 questions. One is, do you allow other lenders financing in behind yours?
Good question. So say the answer is yes, but we would need to. So are you talking about at funding? So say if we were doing like a bundled mortgage at close kind of thing?
Yeah, so I have a client who's just started in this Alberta investing group, and so she reached out to me. They have investors who will go in second and third position if they can get somebody in to 75 in first position.
Okay.
After seeing your numbers, to me, it makes sense for them to put the 10,000 in and just do it all with you. But I just wanted to know so I can take info back to her.
Yeah, good question, Patricia. So there's not a quick answer to that question, but I'll give you some context as to the why. The product is designed high leverage. If they can close with 10 grand down, and if they can show the down, reno, close, and carry, maybe they don't need that investor and they can keep all that profit themselves. Great. So that's one of the reasons why we've built this product this way. So high leverage, we're basically 100% loan to value at close if you factor fees in that instance, because those fees are capped. Now, say if you have a client or a group of investors who might be a little bit more rate sensitive, they want to buy down the rate and bundle a second or third even at closing to get the lower rate. Is that something that we would look at doing? The answer is yes. On some caveats though, and those caveats would be: 1, we need to make sure that our client has at least 10 grand of skin worth in the game. We have seen over several decades of doing this business, people that don't have any cash in the deal don't treat it with the same respect or urgency. And those deals have a higher probability of failing as a result.
Okay.
So we want to make sure that we see some, no less than 10 grand of the client's cash in the deal. So as long as total advances at funding does not exceed purchase less 10 grand, yes, we can bundle. That's caveat 1. Caveat 2, I guess that kind of covers that. Sometimes people will look at saying, hey, you know, I want to do a second behind you. First advance, we won't exceed this amount, but I want to register for a higher amount because I'm going to be funding the renos and I want to secure my interest, and it's a big reno. Sure. We would just want to make sure that the mortgage registration amount does not exceed 80% of the after repaired value. because we want to make sure that we're not in a situation where we're permitting a mortgage that could clog a sale.
Okay. And then one more question is, can they be done in corporation names?
Yes, we will lend to corps, provided that we get a personal guarantee. We'll also
Okay.
want to understand what that corporation does in its course of business and get the applicable tax information as well too. Reason being, we want to make sure this kind of goes back to the capital and their ability to succeed. If they have to pay the CRA throughout the course of our loan, maybe that could impact, capital flight. They don't have the money to do the renovations, but also certain taxes can take priority over a mortgage, those being GST and source deductions. So
Okay.
we'll want to make sure that they're current on ideally on all taxes, if not on all, the ones that could impact the security of our mortgage and ultimately the success of their project.
Okay, perfect. Those are my questions. Thank you.
Thanks for the questions.
Hey, Rob, it's Ryan from DCI Properties and Certainly Realty.
Hey, what's going on, Ryan?
How are you?
I'm well. How are you?
Good, man. Quick question on LTV.
Yep.
So will you guys lend on the loan to value or the loan to purchase price?
So we lend on basically the loan to purchase. So we can lend with as little as 10 grand down, provided it does not exceed 80% of the after repaired value. Unless we get security on other property, in which case we can advance above the purchase price. So single security, we need at least 10 grand down on the deal, and we'll only approve it if we think it's going to be profitable. If we have multiple properties involved in the deal, we can look at advancing above the purchase price, provided we're writing a loan that the sale or refinance could pay out.
So let's say hypothetically someone buys from us and they're buying, say, for 350 and the property is worth 425. How would you guys, and I guess it probably would depend on the amount down, but theoretically, if you were loaning to the actual value at the time of purchase, are you loaning based off the 425 or the 350 purchase price?
Are they making renos to it or not?
I would assume if they're buying from us, most would be.
Okay, so renos. So basically, if we're not adding any other properties to the deal, the max that we could do would be purchase price less 10 grand.
Got it. Cool.
Thanks for the question. Any other questions, guys?
If not, take silence is golden. More than happy. Yeah, we'll send out all the information after this call, product sheets, flip analyzer, this video presentation as well too. I'll have our marketing team send out a calendar link. If something isn't making sense, you want another call, feel free to set a meeting with myself or call, text, email, whatever works best for you. But more than happy to help support in any capacity, and feel free to reach out if you have any questions, comments, in order to understand how we can better support your business.
Thank you so much for the time from your day. We'll send you some information, and if anything comes up, by all means, reach out. We look forward to hearing from you.
Thanks, everyone.
Take care.